Hey everybody, Rob Maurer here, and today we are talking about a new Elon Musk interview last night with the BBC. We've also got some updates on Tesla Energy, new EPA emissions proposals, and more. A little bit of a disappointing day for Tesla stock today. After starting off the day with a small gain, Tesla finishing down about 3.33% to close at $180.54, while the Nasdaq followed a similar but less significant trajectory throughout the day, finishing down almost 0.9%. Of course, the big news in the broader market today, the Consumer Price Index or CPI report that came out before market open. This was largely in line with expectations. The headline numbers came in a little bit below expectations, maybe 10 to 20 basis points or so, putting the year-over-year headline number at an even 5% versus expectations of 5.2%. So we can see this is the lowest in about 18 months, with the CPI graph continuing to show a nice consistent decline. Obviously, though, that's a little bit easier to show a decline when you're comparing against high numbers from last year. With that being the case, the month-over-month number can be a little bit more informative. So from a headline perspective, that was a 0.1% or 10 basis point increase from the month prior. That's right in that 0.1 to 0.2% range, which would extrapolate to the targeted 2% annual inflation rate. So that looks pretty good, and it was also about 10 basis points below forecast and pretty significantly lower than the 0.4% increase from the month prior, which was ahead of expectations. But the core CPI numbers, so excluding food and energy, were not quite as positive. These came in line with forecasts, so a lot better than a miss, but as you can see on the year-over-year chart, the progress in terms of disinflation has slowed down a little bit over the last few months, and the year-over-year number actually ticking up slightly, 5.6% for March versus 5.5% for February. Finally, for core month-over-month, still running a little bit high at 0.4%, but in line with expectations. So that was the CPI. We'll get the PPI or Producer Price Index report tomorrow. Last month that told a little bit of a different story, so it'll be interesting to see those results. And then the other major macro news item for today was the Fed minutes from the March meeting. The two statements in there that seemed to be getting the most attention were one, quote, the staff's projection at the time of the March meeting included a mild recession starting later this year with a recovery over the subsequent 2 years, end quote. So it's a nice soundbite for the media to grab onto, but because this was the March meeting, we already did see the summary of economic projections, which included the GDP forecast for the next 2 years. So we've already talked about that. Collectively, they cut their GDP projections for this year slightly, but not really all that significantly. More significantly, actually, for next year. So it's a nice headline, but I don't think that really gives us too much new insight. And then the other statement that people are latching onto is, quote, several participants noted that in their policy deliberations, they considered whether it would be appropriate to hold the target range steady at this meeting, end quote. Similarly here, Fed Chair Powell had already alluded to this following the March meeting, so also nothing really too new here in my opinion. Anyway, following all the news today, according to CME Group's FedWatch tool, there weren't major changes in terms of interest rate expectations for the May meeting. Just a slight increase in terms of expectations for a rate pause, that going from about 27% yesterday to about 35% today, with a 25 basis point increase making up the balance of expectations. All right, moving on from the broader market, probably the biggest headlines today relating to an Elon Musk interview last night on Twitter Spaces with a BBC journalist. This interview ran about an hour, at least with the BBC, and then Musk stayed a little bit to take questions from Twitter Spaces. So I will link to the BBC interview that cuts off the end, and I'll link to the Twitter Spaces, which has it all as well. But a pretty interesting and at times somewhat contentious interview, focusing on primarily the first 6 months of Elon's ownership of Twitter, but also some things relating to Tesla that were mixed into that conversation. The most heated part of the conversation occurred when the BBC reporter was talking about hate speech on Twitter, asking what Elon's thoughts were, and noted that he had seen an increase in that since Elon's acquisition. Elon asked him what he meant to give an example, which the reporter was not able to do. Elon kept pressing him and ultimately ended up with Elon saying, well, then that is a lie, and the reporter saying, okay, well, let's move on. Outside of that, things were a little bit more calm. In general, I would say it's a little bit frustrating that the conversation seems to always have to go back to content moderation or politics or the verification system, things that Elon has kind of already explained his rationale on. So even though there's plenty of new subject matters available, even with this being a Twitter-focused interview, like so many of these things, it just kind of moves into that redundancy territory with Elon explaining things he's already explained. Honestly, the most interesting question may have come from Omar on Twitter, towards the end of the space when he asked about the report that Twitter was buying 10,000 GPUs and maybe using that to build a large language model. And Elon didn't really want to fully answer that, it didn't seem like, but basically said, everyone's buying GPUs, with the quote being, Twitter and Tesla are certainly buying GPUs, and we're also working on Dojo, so I think there's a lot of potential there for Dojo that people don't realize, end quote. Always good to have that reconfirmation of Tesla continuing to push forward on Dojo. Unfortunately, the answer here, just the structure of it, a little bit unclear on whether Twitter would be intending to leverage that at some point in the future. There seems to be a little bit of an implication of that, at least from Elon, when he says that there's a lot of potential that people don't realize in the same breath as talking about Twitter. So in general, I think a positive reflection there on Dojo, and with everything that has been happening in the sort of AI field recently, I think it's hard to imagine that Tesla wouldn't be doubling down on Dojo-esque projects. As far as other Tesla-related items from the interview go, again, there weren't a whole lot of things, but he did talk about his share sales to acquire Twitter, talked about sort of that back and forth process during the acquisition phase, where Twitter really didn't want to be bought, put in some poison pill language, and then ultimately it ended up being them taking Elon to court to force him to buy it, which of course we know how that ended up, but Elon said, quote, "I sold a lot of Tesla stock to close this deal. I did not want to sell the Tesla stock. It's not so easy for me to sell the stock as some might think. I have to sell stock during certain periods. I can't sell stock during other periods. So there's only brief windows where I can sell Tesla stock, and this is often taken as some lack of faith in Tesla. In fact, the Tesla stock sales caused the stock to plummet, which is not good. People couldn't parse the difference between I'm selling the stock because I've lost faith in Tesla, which I haven't, or that it's desperately needed for Twitter," end quote. So I think most listeners here understand that pretty well. We've talked extensively about this over the last 6 to 12 months. Obviously, Elon's sales impacting the stock, but other things as well during that period of time. But with Elon saying that, I would not be surprised to see these comments resurface at some point in a current lawsuit or another lawsuit. As for the rest of the interview, he talked a little bit about Twitter's financials. He said that when he acquired Twitter, they were basically running break even at $4.5 billion in revenue, $4.5 billion of costs. Post-acquisition then, of course, costs increased because of debt servicing needs, about $1.5 billion a year, and then revenue declined, maybe $1.5 billion or so, from a combination of just what we have seen in the market for internet advertising during that period, plus some of the concerns around Elon and his management of Twitter. So obviously that creates a pretty dire need for changes. We've definitely seen that for Twitter. Elon mentioned that the workforce is now about 1,500, down from about 7,800 people before. They've managed to reduce their server count from 3 primary locations to 2. But despite that, they're tracking for all-time highs in user minutes, and Elon mentioned again, as he had previously, that if things continue to go well, could be on track for cash flow positive here in the second quarter. What I don't think people realize that is inherent in that statement, that cash flow positivity, that would include the debt servicing, which is only layered onto the company because of the acquisition. So structurally, Elon has dramatically improved the profitability of this company in a very short period of time, despite revenues declining. I think it's actually pretty incredible and not very well appreciated at this moment. I definitely think that's worth reflecting on for a while, and a lot of those thoughts would have relevance to Tesla as well. Anyway, last couple of comments he made on Twitter. He was asked if he'd sell Twitter today for $44 billion like he had paid, and he pretty quickly said no, but then thought and said, well, it depends on who. If he could find the right person, the perfect person to hand it off to, he'd consider it. I think that is just really echoing the comments that he's made about the CEO position that we have seen, with Elon really feeling like, hey, if there's somebody else that can do this, by all means, but he doesn't ever find that person. He said similar things about Tesla in the past too. So in this case, I think just more of a reflection on how Elon answers questions than anything relating to how he actually views Twitter. Finally then, he was also asked about sort of the X Corporation stuff that we had talked about and said, yeah, you're just going to have to wait and see. They are working towards creating the X app or the Everything app. So I know a lot of Twitter stuff in there, but oftentimes in either a roundabout or even a direct way that ends up being relevant to Tesla. But those are my main notes. And again, that interview will be down in the description. Moving on, we do have an update from Electrek today on a Tesla energy product. They say that Powerwall 3 is on the way. Quote, Electrek has obtained confirmation that Tesla has applied with some electric utilities to have a new product named Powerwall 3 approved as certified equipment for connection with those electric utilities, end quote. Following that report, Drive Tesla Canada said that they have been able to learn a little bit more information about Powerwall 3, saying that according to their source, Powerwall 3 is switching from a nickel-based battery to a lithium iron phosphate pack, which shouldn't be too surprising. Tesla has very strongly alluded to that being the case, but that should improve the cost structure for Powerwall 3. As for the energy capacity, they say it's the same at 13.5 kilowatt hours, but with about 50% more peak power capacity than Powerwall 2. And they also say they were shown a photo and it sounds like given dimensions of Powerwall 3, so they did a mock-up of how that would compare in size to Powerwall 2, and it looks like a pretty significantly smaller unit, despite again being the same energy capacity. So if this information is accurate, and it does seem plausible, the big unknowns that would remain at this point would be the timing of the launch, which again hopefully would be soon if Tesla's already seeking certification with electric utilities for this product, and then also, of course, pricing. Hopefully that comes down, and with the credits that energy storage is eligible for under the new Inflation Reduction Act, hopefully this can be the step change for the Powerwall business like we have seen recently with Megapack. All right, last few items for today, as we are now 1 week out from Tesla's Q1 earnings report next Wednesday. Say Technologies has opened up the question and answer process for that earnings call. So investors that are linked up there can now go and submit questions, or at this stage more likely to have an influence would be voting on questions to be asked during that call. Now, I try to refrain from commenting on these individually, but right now the top question is asking about specs and pricing for the Cybertruck as well as new features. I get it, customers and investors would like to have that information, but as Elon says time and time again, earnings calls are not the place for product announcements. I would consider that a product announcement. Never know for sure what kind of a response we're going to get from Elon, but it just doesn't feel like the proper venue for that question. Tesla is obviously going to communicate all of that information when they feel the time is right. Next, just a quick update on China insured vehicle numbers. Usually by this point in the week, we do have those numbers, but I'm not really seeing them published in many places yet. So I'm seeing numbers out there of around 7,000 vehicles, which would be good for the first week of the quarter. But I'll wait until we've got a little bit more confirmation on that to discuss that in a bit more detail. And then lastly for today, as we had talked about expecting, the EPA did announce their proposed emission standards for 2027 through 2032. This is still just a proposal. There'll be time for public commentary and things like that. But I would imagine that largely this will be the framework that ends up being put in place. In terms of that proposal, it is about 1,500 pages worth of information. So obviously we're not going to get to all of that today, but the gist of it, at least in terms of how it is being presented, is that it would target about 2/3 of vehicle sales in the light duty passenger vehicle segment to be electric vehicles by 2032. 46% of vehicles to be EVs in the medium duty segment, and then about 1/4 of vehicles in the heavy truck segment being electric. Related to this, and also related to the topic that we had talked about yesterday, Reuters today reporting that NHTSA will be looking to propose parallel fuel economy standards over the coming weeks. I'll need to do a little bit more digging on how exactly those two things intertwine. It's not something I'm 100% clear on right now, but in general, more to come on these emission standards. All right, that'll wrap it up for today then. As always, thank you for listening. Make sure you're subscribed and signed up for notifications. You can also find me on Twitter at Tesla Podcast, and we'll see you tomorrow for the Thursday, April 13th episode of Tesla Daily. Thank you.